Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Call up, leave me a message. This is an interesting program today. We have some interesting guests coming on to talk about some different aspects of both what your decisions are going to be made in order to buy or sell your property and places you want to live in. We have, it's that time of year where we think about other people, a lot of other people who need help, want help, and certainly those who can give help. So we're going to bring those type of people onto the show to talk about their communities, what they're doing for them, in them, and how they're trying to help, not only this time of year, but all the times of the year. It just happens that this time of year, starting with the Thanksgiving holiday, everybody turns towards that feeling in their heart to be able to give to other people. So on the heels of that, I talked to a guy today, and again, I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. Thanks for tuning in each and every week. You can get us by phone number. Our email is info@malibufunding.net. Malibu Funding, they sponsor the show each and every week. Their NMLS number is 79620, and that's a nice company that spends money each and every week in order to have me on the radio with you, in order to give you the information, experience, whatever it is that I can do to help. So let's see, what else? KCAA, KMET, and K-Tahoe, the great radio stations that carry the show. I want to thank those fine people. And I want to give a fine shout-out to the engineer and promoter of the show, Daryl, who is sitting here and helping me each and every week put this on. I couldn't do it at all unless you were here. Thank you.
My absolute pleasure.
Okay, excellent. All right, so I'm talking to a guy today, and we spend a lot of time on the show talking about real estate, mortgages. Obviously, that's the name of the show, The Mortgage Voice. But this gentleman was telling me about a scenario. He got a job, worked for a company for a couple of years, and then the company treated him really badly, and he left the company. And it turns out there's a long history of these problems with that particular company. And maybe you've experienced this at your own job. Right now, labor market statistics tell us that you as an employee or you as a part of the labor force have leverage, meaning that there's demand for your services. Now, I don't know what kind of job you're in. I don't know where you're working. I don't know what kind of salary you demand. But skilled labor, and I would imagine in this particular labor force, skilled labor would be extremely computer literate and programming as a must, and certainly those that can supply that kind of intense service for baby boomer generation business owners are going to be indispensable to the future. However, if it's hard programming and long-term app building and things like that, it's probably being outsourced. But you know the type of job that is going to be very useful in the next 5 to 10 years, and those jobs that are needed. So if you're in a company that has put the squeeze on you, and you know what I mean when I say that, the company that wants to lean on you heavily, wants to get your overtime hours up, but you're paid down, think about your skill set, about what you can offer, and begin to shop around. This is a great time of year to do that, and why do I say that? Most companies lay off at Christmas time. And last month was no exception. 255,000 new applications for unemployment went out, although the unemployment rate really has remained steady and rock solid for months, if not years, trending down. But this time of year, that's when people try to dress up the bottom line, they try to cut costs, and they try to eliminate jobs. And all the time you're thinking, anybody out there who is in that millennial to Gen X, Gen Y generation, anybody 40 and under is knowing what I'm talking about. Yeah, they say there's plenty of jobs, but where are they? Well, if, as I said, if you have the skill set, and if you have the things that not only business owners who are my age, 65, 50 to 65 and up, they don't have the skills that you all have in terms of computer skills, internet skills, programming skills, app building, anything having to do with networking. All that is what I'm saying is valuable skills. So think about putting your resume out there. Now, how do you do that? Now, we call it a resume. Nobody does that anymore. It's all done online, either through some type of employer app, some type of way by which you get your information to people who are looking for your skill set. You can even hire a headhunter, somebody who is looking around for yours particular. If you're an engineer, if you're somebody in the communications field, you certainly have a skill that people are looking for. That's why I put it out there, because my poor friend who got treated poorly by this company is sitting around now trying to figure out how he can make ends meet. And he's an older guy, and he's 59, about ready to turn 60. Now, where's he supposed to go? What's he supposed to do? I guess, at his particular age, very, very talented and skilled at what he does, but it's a job that just, it's losing its, need. I mean, the automation that's out there, the way people look at labor today is quite a bit different than they did 20, 30 years ago, and certainly 40, 50 years ago. So it's important to try to understand that, see where the economy is going. We said on the show many times that the skill set you're going to have today, we're going to eliminate about 50 million jobs in the next 10 years. Why? Because we're just not going to need those type of workers anymore. And the type of jobs they are. The less than skilled, something that a computer could do, something that a robot could do, and believe me, the robots are coming, or some decision-making processes that are currently handled by mid or lower-level managers are all going to be handled by artificial intelligence. And this is really what's happening. Okay, so let's get into politics a little bit. And the reason I do that is because we may see a sea change here, we may not. Certainly, if you are in business right now, you love this current administration. Why? Because taxes are lower and business hasn't been this good for years, even though it was steady and increasing and improving during the last presidency. This particular president has really taken growth to a new level. And what do I mean by that is that he's trying to maintain competitive advantages by lowering taxes, is really what it is for most businesses, especially in the financial services sector, which is what we are. So Elizabeth Warren, let's talk about her for a second. So she's got a lot of big, bold ideas. She wants to take a lot of money out of your pocket or out of my pocket, let's say, and give it to people or programs or other things. I don't know whether that's a stimulus for the economy or whether that's a cold shower. But what she said in terms of the last crisis in housing in 2007, 2008, the mortgage meltdown, what happened? Okay, so what happened was a lot of people couldn't pay their mortgages and they were foreclosed on. And there were millions of homes that were sold way under market value. And who bought those homes? People with money. And they call those people the wealthy people, right? People like myself, which I didn't buy any houses, but people like me, business owners, older people who had money, people who had disposable income with which they could invest. I've told the story many times about the $22,000 condo that I did not buy in Las Vegas because I was trying to grind him. Now, that's a joke, right? Today, that particular condo's worth $200,000 10 years later. That's an amazing return on investment. But what she said and is saying is that was the rich taking advantage of, the poor or the people who can't afford it, which is great music to people who are in that position, and I understand it, believe me. However, the return for the people who could afford to buy at that time was that it saved the economy. And those houses were purchased so it didn't drag the rest of the housing market down. Now, have those houses been sold? No, they haven't been sold. Most of the people who bought houses during the recession still own those houses. And a lot of them are, multifamily owners, whether it's in Las Vegas, Nevada, whether it's in San Bernardino or Riverside counties. You know what I'm talking about. And it's really held tightly to the control of the supply of housing in all these areas. And as everyone knows, we're dying for housing. We're dying for these type of products to be on the market rather than being held by a selective few. So does she have the answer? How do we deal with that particular answer? I don't know. I'm not a big fan of Elizabeth Warren's approach. I'm not a big fan of Donald Trump's presidency other than his economic programs. Other than that, not so much. But economically, and that's why I think there's a real divide between the two parties. And so if you're doing well, you're probably going to vote one way. If you're not, you're going to vote somewhere else. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number here at the studio. If you hear something on the show that you like, write down the number and give us a call. Make a comment, ask a question. We try to present a lot of different ideas and facts on the show about both real estate and mortgages that have to do with helping you make decisions, the decisions that are really important to what you're going to do, whether now or in the future, or helping a relative, a family member, a friend. There's all kinds of thoughts that go into decision-making processes, and we try to supply you with that kind of information each and every week on the show. I want to shout out to Riverside, San Bernardino counties, KCAA, KMET, and up in Tahoe, Tahoe, our great affiliates that carry the show each and every week. I want to thank you. It's that time of year where we're looking at Thanksgiving, Christmas, the holidays, and I wanted to get on the show somebody who, I guess at this time of year, it gets busier than normal times of the year. At least that's what they say at the hospitals. Anyway, with me, joining me is a paramedic from Ventura County, Jeremiah Bush. Jeremiah, how are you?
Good, Jeff. How are you?
I'm fine, thank you, and thanks for coming on the show.
Yeah, absolutely. Thanks for the invite.
Okay. First off, I alluded to this time of the year being busier than other times of the year, but maybe that's a misnomer. Maybe that's not true. Describe your daily operations, what you're doing every day as compared to the rest of the year. Is it busier now or not?
It's a different kind of busy. So each season brings about different types of calls. Generally, summers have their own style of busy because the days are longer, it's
right.
hotter. People are out of school, they're on vacation. But the holidays bring a different type of business because there's more people on the roads.
Right.
Traveling from, their home to relatives, so you get more car accidents. And then plus with family gatherings, you may have higher levels of alcohol consumption. You may have choking episodes because people are eating foods that they're just not used to or overindulging or things like that. So it's not so much that it's busier, it's just a different flavor of busy.
I see. Now, you've been doing what you do for a long time, so you have a lot of experience, and I admire the fact that you've hung in there all these years. Give us some examples of how you maintain your sanity during, these stressful calls that you do almost daily.
Well, I've been doing this now for almost 14 years. In January, it'll be 14 years.
Oh.
And I think with anything, people are just sort of built for certain types of jobs, and this type of work, emergency work, seems to be something that I'm just, sort of built for, I should say.
I see.
Other people are good at processing data and sitting at desks, and other people are really good at working with children, but for some reason, this type of work is just something that sort of fits my personality.
Mm-hmm.
And so as far as, dealing with the stress and everything, part of it comes through training and experience, but you have to have a certain level of separation between the public and their emergencies and yourself, and know that that's not your emergency, and you have a job to do, and not get too wrapped up in the personal details of people, and just sort of move on to the next job. And then also taking, appropriate time off and enjoying your own life, too, while you're out there trying to take care of everybody else.
Yeah, it's a very interesting job, not only the hours that you put in, but also the different types of people that you encounter. In the real estate world, we often don't talk about it, but it's important to know how the emergency services get to you when it is needed. I know that there are many elderly people who listen to this particular show, and there are obviously new homeowners, new home buyers out there in the marketplace who are starting a family, and they want to know, how quick is the response time, where is the hospital closest to me, and we as realtors and as mortgage professionals rarely talk about it. Give us an example or some idea as to how the response time is out in Ventura County for emergency calls, and then the hospitals out there, just so people have an idea of what to look for or ask for when they're looking into investigating this kind of issue.
Sure. Well, anywhere in the country, in any type of metropolitan or suburban setting, for a long time there's been a standard response expectation of 8 minutes or less for ambulances.
I see.
And in many cases, fire engines are going to have responses of 5 minutes or less. And that's pretty standard across the board anywhere in California and nationally. If you're in any major city or even suburban area, you can expect to have somebody at your doorstep in between 5 to 8 minutes.
That's amazing.
As you get further out into more, rural territory, obviously that response time is going to increase just because of the distances needed to cover and the fact that there's just a smaller population that county or whatever municipality you're under may have more limited resources to send out to the far outreaching areas than more concentrated in the city. But I think people who move to more rural areas, they kind of expect to be a little bit removed from,
right,
more city services. That's kind of maybe why they choose a more rural setting. As far as hospitals go, in Ventura we have 8 hospitals, which, depending on where you're listening, that may sound like a lot. It's actually not too much when you consider our neighboring county of LA, which has, I can't even remember now.
Right.
We have a good hospital system. We have 2 trauma centers. We have a lot of cardiac specialty centers. We have a very comprehensive stroke center. We don't have any children's hospitals specifically, although we do have emergency departments that are approved for pediatric emergencies. So good to treat those, and then they'll usually be stabilized and transferred out. So as far as people looking at areas to move, if you're, thinking about hospitals, always helps to pull up, Google Maps or something and just see how far your home may be from the nearest hospital. You can inquire about the types of resources, because not all hospitals are created equal.
Right.
Some are designated as trauma centers, and some are not. Some are designated as cardiac specialty hospitals, and some are not. So you can think about maybe your own medical conditions or that of your relatives, and what they would be more likely to need.
You were talking off air about when you arrive at a home and some of the issues that you as a professional encounter, and I know that you wanted to try to talk a little bit about, you come into a home and it's crammed full of stuff, and the patient is in the back bedroom and you can't get to them by walking through, you have to walk sideways, and then how to extract them. Give us some information about how it would be best served if, when you entered a home, how you could extract someone more easily, depending on the design and the layout of the furniture and stuff like that.
Yeah, exactly. So if you've never called 911, you may not know what and who is going to arrive.
Right.
But you can expect about 5 people are going to be at your house. You're going to have a fire engine and an ambulance at minimum in most jurisdictions. So that's going to be between 5 and 6 people. And we bring a stretcher to carry the person out on, as well as at least 3 or 4 different, large duffel bag sized pieces of equipment, and then 5 or 6 of ourselves.
Right.
So we're going to take up a lot of space in your house. And sometimes things that people find aesthetically pleasing in home design is actually really difficult when it comes to access.
Mm-hmm.
So stairs are always a hazard, narrow hallways. And
right.
So although you may not be able to do much about your front door, you may want to have side entrances available to have the gurney come around the side of the house and maybe into a rear slider. Cluttered garages are always difficult because, sometimes that's a better access point. But if it's full of, belongings, that
right.
makes things a bit more difficult. And then if you have someone in your family that you think may need emergency care, it's better to place their bedroom on the first floor versus the second floor and closer to the living room or the front door than further back. It's always a challenge when you have a really sick individual who's on the second floor and in the furthest bedroom, down the longest hallway, in the smallest room, because we have to bring a lot of people and equipment to a very inaccessible space. And that may be something to think about, too. If you're purchasing a home that may be somewhere you're planning on, retiring in or spending a lot of your golden years in, maybe look for something with a single story instead of two stories.
Right. California has a lot of that. California ranch-style home. It's really great.
It is, yeah. And, certainly if you have, a pool in the backyard, you need to think about, hazards with children, putting up a safety gate.
Right.
Grab rails in the restroom, not keeping hallways cluttered. And that's not just for us, but if you have an emergency yourself and you need to evacuate quickly, you don't want to be tripping over your own furniture or anything like that.
Jeremiah, thank you very much for coming on the show. I really appreciate the information. I'm sure the audience did too. Probably have you back again in the near future just to talk about, some of the things that you mentioned during the holidays as to a different kind of approach versus the summer. Anyway, thank you very much for coming on.
Hey, you're very welcome.
Okay, that's paramedic from Ventura County, Jeremiah Bush. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929, our telephone number here. If you have a question, comment, or you need something answered right away, give us a call, leave a message, I'll call you right back. The reason I say that is because during the show, we have so much information that we try to provide that you may have several questions, and then when you hear and you're waiting on the phone and then you have another question, best to write it down and so I can call you back. And we have a lot of people who do that, and we provide them, as I say, with timely information in a changing marketplace. And one of the guys that we bring on the show in order to help us guide you through those pitfalls and problems in the mortgage industry as well as the real estate is Charles Giscombe. He's the qualified individual, the manager of our offices out in Las Vegas, Nevada. And I want to welcome him back to the show. Charles, how are you?
Great, Jeff. Thank you for having me again, my friend.
Thank you very much. Okay, give us an idea of what is happening in Las Vegas, in upstate New York, in where else are you doing business? In Virginia, down in North Carolina, in California. You really have your fingers on a lot of different pulses. Tell us what's happening in the marketplace.
Well, I will say, I wouldn't be able to touch all those places if it wasn't for the wonderful, wonderful ecosystem of Malibu Funding. So I'm super excited to be a part of the Malibu team for as long as I am.
Great.
And, Jeff, we are always coming up with new innovative ways to help our clients. I'll tell you, the market is still booming, Jeff.
Yep.
Surprisingly, we all think that, the conversations and the foresight and foreshadowing is that there's something coming on the horizon, maybe some sort of crash. Obviously, we know it can't be the way it was before, but there might be a downward slope in the market. But, Jeff, as of now, not the case. A lot of great properties out there. People still spending money. People still looking for properties. A lot of investors out in the market, Jeff, looking for investment properties, looking to do fix and flips. Money's still moving around, and we here at Malibu Funding are always here and available and ready to help any client that wants to get into those situations, whether it's a primary residence, whether it's an investment property, with refinance, whatever you're trying to do, traditional and non-QM. And as we speak on how we're helping clients, the non-QM market, Jeff, is booming. It's growing and growing. Every month, there's more clients that are jumping into those particular products because they provide an opportunity for investors who are structured entrepreneurially to get involved without having to provide the traditional documentation, tax returns, 4506Ts, different things of that nature. You can now get into a property as long as you show that you have the ability to repay, whether it be through bank statement or wherever that might be, you can qualify. It's just based upon your credit and your ability to show the income every month, Jeff. And that's how we've been helping people out here lately, a lot of people lately, to get into the market again.
You know, there's a couple things going on nationally. There's obviously an election coming up, right? Everybody's all in a twist about whatever is happening. I don't care what side you come down on, but when it comes to mortgages, when it comes down to how are people going to borrow money, it's a pretty good market right now for that, right? Rates are still really low. They actually come down this week, and I see that continuing if a particular person that nobody likes gets elected. What is your feeling in the marketplace by, the fact that you talk to a lot of different people? I mean, people can say one thing about the President of the United States, but on a business side, on a lending side, maybe something completely different. What do you see?
I see that, exactly. People might have their personal opinion
right.
In regards to how an individual's personality traits are, the characteristics, but in regards to the actual business, the business side of it, we have to say, Jeff, this is his field.
Right.
He's involved with real estate, mortgage. At the end of the day, what he's going to do is he's going to be favorable to those businesses, banking, moving money, allowing transactions to happen. That's how the economy gets affected. So what happens now, as we know, as the economy gets worse, if it gets worse, certain things will happen. Right now, it's a comfortable spot, and lending and banks are still loosely offering money to individuals. So when the economy's this way, this is what they're doing. If the change comes, usually when there's a presidential election that's coming and something's happening, Jeff, you might get, the markets get a little leery, so they're holding off to see which way it's going to sway. So you might see interest, money slow down a little bit, interest rates might go up, some uncertainty happening. But right now, currently where the president stands and where the economy stands, we're in a good spot. And this is an excellent time for anybody, regardless of your belief and who you like, what side you fall on, to get involved with the real estate and the mortgage market right now. It's an excellent time for everybody to be a part of.
Yeah, and you were talking about the non-QM market. I know that 30 to 35% of all loans in the U.S. are done in the non-QM space now, and they're talking, I read an article today about getting rid of TRID entirely, which would really boost the lending just because there's more money to be made for people who lend the money. Even though there are less brokers, mortgage brokers, mortgage brokering is now accounting for almost 30% of the loans done in America, which is a huge comeback from 2010, 2009. Give us an idea of products. What do you see as a good product for someone who's a self-employed person who wants to get a loan for an investment property, maybe something to buy, hold, and get some rent, build equity in it for their retirement? What do you think is a good program for that?
I think there's a lot of good programs out there, but one of the programs that I've been looking at a lot, Jeff, is I have a program called the NONI.
Okay.
It's a non-owner, no-income loan program that will allow an individual to be, from an investment standpoint, get involved. And it's a stated program, okay? So basically, your income is stated. And what you have to provide is you just have to, once again, provide the ability to repay, meaning that you can show, that you have the money to close the loan. But one good thing or great thing about this situation is that you can close this loan in your corporation name or your LLC name, and it doesn't affect your personal credit. That liability will not show up on you personally. So now you can close that in a business name, and the business will carry that. Now, obviously, you have to be the guarantor on it, and if anything ever happened, obviously, we'll trace back to that guarantor. But in regards to things being in good standing, that liability won't show up against you personally. What does that mean to the borrower? It means that your debt-to-income ratio doesn't get encumbered. You don't have to worry about the amount of properties that you can purchase, because as long as you can pay, it's unlimited. And one of the really great things is the income documentation, since it's no income, is limited to none. On top of all of that, what I just said, they have rates that are coming in now that are almost comparable to traditional rates.
Give us an example.
Back in the day, I'm sorry, Jeff. Back in the day, I'm going to give you an example.
Okay.
Back in the day, Jeff, that loan would be considered a hard money loan. And you might be in a 10 or 11% loan. Today, that same loan, Jeff, you can get as low as, a 5.75% interest rate.
Oh, so it's almost half, right, of what it was back in 2009, 2008.
Yeah. Now imagine if you provide additional documentation, not to fill the tax returns, but additional documentation, you can get your interest rate as low as 5% flat.
Wow, that's tremendous. And is this credit driven as well, or is this just equity in the property driven?
It is equity driven, but it's also credit driven. But the scores are a lot lower. And gone are the days where you have to have the 700 credit score in order to get a loan like that.
Right.
If you can get in a loan like that for as little as a 640 FICO score.
And what do you think they do with these loans? Obviously there are investors out there who are buying these loans, pools of these loans, and because there's equity, how much equity do you have to come in with a property or a loan like this?
It depends with the particular lender and what their comfort level is. But a lot of these lenders have been doing these loans for so long, Jeff, that they're decreasing their threshold. They're saying, hey, listen, we're comfortable with this. A lot of people are paying on these loans. We're not having too many issues, but they also put themselves in a position where if something does happen, God forbid, that their equity position is a great position. But you can get into a loan like this, Jeff, if it's an investment property, for 20% down, just like a regular conventional investment property, 20% down. In some cases, you have to put 25% down, but still, with the little amount of documentation that you have to provide, and without having to abide by trade or RESPA, and from that standpoint of that type of loan, it's a great program, a great product, and it's a fair situation for an individual to get in without having to have all the documentation that a traditional loan would require you.
We're almost out of time. Could you let people know how to get in touch with you? These are some great products, and you obviously have the experience to get them done.
Absolutely. You can reach me at charles@malibufunding.biz, charles@malibufunding.biz, and you can contact me directly at area code 702-328-5191.
Charles, thank you very much for coming on the show. I really appreciate it. Great information as always, and we'll talk to you real soon.
Jeff, thanks for having me again, as always.
Excellent. Thank you very much. That's Charles Giscombe. He is the manager of the office out in Nevada for Malibu Funding. And by the way, he can do loans in many states, not just in Nevada, but that's where he's based. I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number here. Write down the number, pick up the phone, give us a call, and we can answer questions about mortgages, about what you need to know and what you need to, I guess, look out for in the mortgage and in the real estate field. It's always a changing market. It's always things that happen that you're not aware of. We try to bring you that information as well as other information. It is the holiday season, as everyone knows, coming up. It's the start of it. I guess it starts in Halloween, but regardless, we try to bring onto the show people who give back to the community, who do things for others, who try to lift people up, and that's the purpose of the show anyway, is to try to give you information to be able to use when you make decisions about buying and selling real estate. Part of that lifting up process is to see how other people are living their lives and helping. From Tuck and Run, we've had him on before, but we haven't had Trista on before. It's Chris McLemore and Trista Miller from Tuck and Run. How are you both doing?
We're doing great, Joe. Very good.
Very good, yes.
Excellent. So if you can give a quick rundown of what it is that you're doing. I know that, Chris, you had said that you're doing some exciting new things, but give us an idea of what Tuck and Run is and what you're doing for the community out there in Las Vegas.
I sure will. Thank you for having us on your show today. Tuck and Run is just like it says, Tuck and Run. We're running and doing a lot of things in the community, which has really been a blessing. Initially, Tuck and Run started out, which was just going to be feeding the homeless. It's something that my parents had started even when I was a kid, because I grew up in the restaurant business. And so we initially started just wanting to feed the homeless and just kind of giving back to the community, especially as a community that I grew up in. Being an ex-Raider, just allowing me the opportunity to be able to give back to my community. But then I went to a youth summit, and I started really digging into where our youth were at the time. And not only was our youth being homeless, but also being hungry, but in the process of what all is involved in being homeless, which I didn't have a complete understanding of what that all entails for our youth, especially in a city like Las Vegas, which is 24 hours. So in this hub, you're able to actually, being a youth, you can hide on the strip or you can hide in these different places because they're open 24 hours, whereas in other cities and small urban cities, it's kind of tough to really hide yourself. So I started getting into that, and then as we got going, especially through the summit, I started wanting to find out ways how I can really not just feed the youth, but actually be able to help the youth and allow them to be productive citizens in our city, in our environment,
right,
and allow them to be able to take care of their families. So I started digging into one of the things that I heard the youth mention at the summit was they needed a way to communicate what was going on with them, communicate what was happening, and how can they reach back out to get services that is needed for them to be able to come out of this situation they're in. And so one of the things that was mentioned in that summit was a youth app. So I started this youth app, and then as I created the youth app, and started realizing the mental health of situation that's going on with our youth.
Right.
I started realizing not only are they homeless, but they do not even have the ability to get medical services.
Right.
And so all these things started coming up, and I'm like, oh my goodness, it's not just feed the youth. There's a lot of other things going on with our youth that I wasn't aware of. So along with Tuck and Run and along with the young lady on the phone, Tristan Miller, we started networking and connecting with Lady Gaga's foundation. We started networking, connecting with the mayor. We started networking, connecting with community leaders here in Las Vegas. And what we've done was not just with the app, but now they're looking at the app to be like a intake service to where youth that are homeless, they can use the app to start the process to find a bed. Or youth that are having mental illness, they could use the app to start the process to help them with whatever situation is going on with their mental awareness. So Trista came aboard, and she started driving those services and those wraparound services with the app. And I'm kind of let her talk about that a little bit more and expound on it.
So this app, first off, what is the app? How do people download it? What's the name of it? Where do you get it?
Yeah. So the app is called the Las Vegas Youth Resource Network. It's currently available in both the Google Play and the iTunes App Store.
Okay.
It's free. It's a free app. Anybody can download it. I actually encourage everyone to download it and check it out. When you open the app and you look at it, it seems so simple. There's a resource guide in there. There's, tailored information for foster youth and, LGBTQ youth and things like that. And when you look at the app, you say, oh my gosh, this is almost like why we can see why kids would need this, right? But what we found out before we started building the app is there's really not much like this out there. Even looking across the entire nation, there's not really a lot happening with technology to bring young people into getting services. Even though what we know from kids' own mouth is that they will go without dinner before they go without their phone. They will figure out how to pay that phone bill. It is their lifeline.
That's funny you say that. That would be the last thing I would think. Of course, I'm an old guy, but anybody who's young is looking at that phone before they want to eat. That's amazing to me.
That's exactly right.
All right.
Well, because young people feel like, I can scrounge up $1.50 or $2 to hit up, McDonald's for a McDouble, but my phone, man, that's how I contact my friends. That's how whatever they're doing to make money, however they're surviving, that phone is their only lifeline. They might stay in a different place 7 days a week, but if they have that phone, even if it's just Wi-Fi enabled, right? Even if they can only message when they're on Facebook on Wi-Fi, it's still their link to other people in the world that can hopefully help them. But the downside is, right, even though technology has really boomed over the last decade, right, we're leaps and bounds from where we were before that.
Right.
the way that young people and the way that we expect young people to reach out for help really hasn't changed since the 80s. So in the 80s, aftercare services for at-risk populations became very popular. It became a model that we started to follow for foster care, for adjudicated youth, things like that. And the process today to get help looks very much the same as it did in the 80s. Get on the bus, go to a location,
right.
Ask them if they have, assistance. Well, what we can do with the app is we can put that at the touch of a young person's fingertips, right? So at 2 o'clock in the morning when they're on the edge and they're like, man, I'm tired of living like this, right? They don't have to wait in the morning until in the morning when all the offices are open. They can start the process of reaching out for help in that moment when they're ready. So instead of asking young people to really accommodate themselves to the rest of the world, what we're doing with service providing is really tailoring that to the needs of the young person. And, the other
How does a kid on the strip, excuse me, just for 1 second, how does a kid on the strip find the app? I mean, obviously I'm on your app now. I've had it for a while. It's terrific, but I'm savvy enough, and I'm obviously have a phone. But you're a kid on the strip. You need a place to stay. You got a phone, but how do you even know to get to this? What are you doing to push your particular app out into the marketplace? Are you getting other people to push it out there for you? Is it on billboards? How does it work?
So what we're doing right now, so we finished the app a couple months ago, and that was our phase one, right, to actually have a product that we could show people as like our phase one. So now we're in outreach mode, and we're doing things like we're actually building a youth board, utilizing young people from the homeless community through hopefully through Nevada Partnerships for Homeless Youth. We'll be able to reach out and get some youth from their boards. We actually are working with a couple other foundations to start a youth board so that we have the young people's voice and their assistance in outreaching. What we know with young people is that most of it is going to end up being word of mouth, right? We need young people to use it and like it, and they're going to tell their friends. And that's really where we're focused at right now, in getting into meetings that are happening around the city with young people, going out to locations where young people are at, and really doing direct service to let young people know that this app is here and the benefits of using it.
How do people donate? How do people get in touch with you?
Jeff, one of the things we wanted to do, Jeff, was not to reinvent the wheel.
Right.
We already know that there's a lot of nonprofits out there that's already helping youth. So by connecting with them, we also connect with their youth and everything that they're doing to connect with the youth. So that will allow us to be able to not only connect with the nonprofit, but also to connect with the youth and then grow from that instead of trying to reinvent the wheel.
Oh, I agree with you 100%. And everybody's doing the same thing and wanting to help each other. I'm sure you're getting a lot of support out there. How would people donate?
Correct.
How do people get in touch with you if they want to? Do they go through the app?
That is correct. They can go through the app, they can go through the website, but it's really easy to go to the app. In the app, you have a section there where for comments, to contact us, so forth and so on. They can go directly through the app to make that happen.
And that's Las Vegas.
They can donate through the app as well.
Right, Las Vegas Youth Resource Network?
That is correct.
Okay, and then just Google that, and then the app they can download from that particular search?
Yeah.
You can search for it. If you also go into your phone's app store, so if you have an Android phone, you probably already have the Google Play icon on your phone. If you have an Apple device, you probably already have an icon for the iTunes App Store. And if you go in directly into either one of those and search for Tuck and Run or Las Vegas Youth Resource or the whole name, Las Vegas Youth Resource Network, it will pull that app up to put directly on your device.
Thank you very much, both of you, for coming on the show. I know that was a short interview, but we want to have you back again soon around the holiday season, because I think this is it's a sad time that we have to impress upon people to, get help, seek help, and this is a great thing. Exactly. I really appreciate it, and I appreciate what you both are doing.
Thank you so much.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry, and that has been Chris McLemore and Trista Miller from Tuck and Run, as well as the Las Vegas Youth Resource Network. I'm Jeff Barton, as I said, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number over here. Give us a call. Leave your questions and comments about what we are talking about on the show today. It is getting towards the end of November. I appreciate everybody listening to the show. It's a great time to buy, by the way. Even though we have a diminishing supply in the housing market at this time of the year, what we've also got is fewer and fewer buyers, which is, of course, why people take their properties off the market. And what we have is rising house prices have slowed. And what does that mean? It means that if we have a market like we usually do this time of year, the rate of housing incremental costs to build as well as to buy have come down. And so if you're looking for a house right now, let's say you're, been waiting all summer to sell your house and it just hasn't sold, and your realtor keeps saying, lower the price, lower the price, lower the price. And you're saying, I don't want to lower the price, but you do need to sell because you got to move and you got a bunch of other things to do. It is a really good time to sell if you have the right price point. So check back with your realtor. There are fewer buyers, yes, but there's a lot fewer listings on the market. So if the housing prices are not rising, what are you waiting for? You want to wait for December or January or February when the housing supply of housing gets even worse and there are fewer and fewer buyers? No, you want to sell the house now. So make sure that you're talking to your realtor about the exact price it needs to sell, because I think it will sell. It's a great time of year, as I said. If you're in those terrific counties out there, San Bernardino and Riverside, and you're listening to the show and you're wondering, okay, where are these houses that I want to buy, and how exactly do I get a hold of the right realtor who has information? Well, you all know Zillow, you all know Realtor.com. You can find the houses. The question is, can you afford it? What makes housing more affordable is the fact that rates went down again, and they had been trending upwards. Last week we were talking at 4%, 4.25%. Well, they actually went down this week, which I really like. And there's great hint that there is some sort of trade deal happening. I mean, we hear about that each and every week. And what would that mean? That would mean that we would have a great rally in the stock market, and a lot of people would put money into the stock market. And that's always a good thing if you're invested in there. If you're a retired person and you have your retirement income or your retirement savings through your work or through your own personal savings and investments, yeah, that's a good thing. If it goes, and it predicted it going up 1,000 points, which I thought was, wow, 1,000 points? We're going to get to 28,000 plus? Really amazing stuff. Okay, the mortgage interest rates, let's talk about that, because I think that drives demand and is driving demand right now. 30-year fixed rate loan at 3.75 to 3.875%, and we were up to 4% last week, so that's pretty interesting. And also, it's good news for you. One of the things this time of year is people get they want to go to Thanksgiving, they want to get to the holidays, they want to enjoy their family time, so they stop shopping for mortgages or they stop shopping for real estate. That's why if you are shopping for real estate, it's a great time. And if you're shopping for a mortgage this year, it's a really good time. So if you are out there right now and you're thinking about refinancing, the rates have come down. You check in with a mortgage broker, a mortgage banker, your local big box bank down at the corner. All of these people can give you terrific rates if you're an A-paper borrower. If not, there's plenty of programs out there. We'll talk and have talked to many guests on the show who talk about alternative financing, alternative programs for people who are not necessarily fit in the Fannie Mae, Freddie Mae box. And as everyone knows, if you have, 43% DTI and you've got 20% down and you're a W-2 worker, yeah, you are A-paper if you've got great credit score. Yeah, all that means is that you will be, in line for the best possible mortgage rate. If you're not that person, well, there is alternative financing. 15-year fixed rate loan. The mortgage rate, 3.375%, and your 5-year ARMs, love the ARM product, at 3.25 to 3.75%, depending on the lender. Now, what does that mean, depending on the lender? Okay, so there's 900 lenders in the U.S., let's say, give or take 100 here and there, depending on the year. But there's 900 companies that'll do loans for you. Malibu Funding, Inc. is one of them, and we're in 10 different states, and like I say, We have a lot of different loan officers programs. We lend our own money, all that kind of stuff. But these 900 companies get to decide for themselves how much they charge and what the rate is. Now, rates are specific to how much money they make when they sell the loans. If you're a direct lender, which Malibu Funding is, and there's a particular rate associated with the loan that you're getting offered from Malibu Funding or any other company, there's usually a way by which they take that loan and they sell it to an investor. Investor can be Fannie Mae and Freddie Mac directly, or it's a different bank, Wells Fargo, just to name several, Bank of America, Citibank. They all buy loans. And then they sell them to Freddie Mac or Fannie Mae. But the higher the rate, the more money they make on the loan. That's just the way it is. Why? I don't know, because if you're getting a 5% loan from a company and somebody else is getting a 4% loan, there's more return on the 5% loan. So obviously the person selling that 5% loan is going to make more money. That's why when I talk about the 5-year ARM being 3.25 to 3.75, depending on the lender, that's what I'm talking about. Everybody, and what they're called is overlays. Do you have overlays? And it's an interesting topic to get into anytime. If you want, you can email me, info@malibufunding.net, and talk about overlays and how you can negotiate a better deal. Look, any lender, me included, will be happy to give you par pricing. Do you know what par pricing is? That's the lowest rate they can offer you without making $1. But they're going to have to charge you. They're going to have to charge you money in order to make. Nobody's doing this for nothing. Be glad to help you. Be glad to save you money. And when they do that, par pricing, there's probably a 1.5% to 2% that they're going to have to charge you in order to make enough money to make their business and their business model and pay their people and all the things that they got to do to run a business. But in some circumstances, that they can do that. There's also a thing called discount points. Discount. What is a discount point? Okay, so say you have a 3.25% loan, and you want to get a 3% loan. Well, you can pay the lender a certain fee with which to lower that discount point. Now, a lot of people will say 1 point equals an eighth. So if you have a $200,000 loan, $2,000 will get you an eighth of a point discount, and you can pay in order to get that. So in order to get that 1/4 point, like I was telling you, from 3.25 to 3, on a $200,000 loan, you're probably going to have to pay $4,000, as well as the rest of your closing costs. Some people don't have the money, can't do it, right? I get it. However, if you do have the money and you can do it, it's a better deal. Why? Because over the length of the loan, 30 years, let's say, you're going to save tens and thousands of dollars on that 1/4 point that you don't have to pay anymore on the principal of the loan. Now, that's a great deal, but you got to have the cash. And all this has to do with, do you have the cash? Do you have the cash for that? Do you have the cash for closing costs? Do you have the cash for reserves? If you do, then this particular program is going to be great for you in terms of discount points. Okay, what else do we have in the news to use section of the show is the Federal Reserve. Now, we talked about, just quickly, the Federal Reserve has entered into QE4. Now, what is QE? QE is when the Federal Reserve bought mortgage-backed securities and they bought T-bills. And that went on for years during the Great Recession and then for 5 to 7 years beyond that. They stopped doing it about 24 months ago, but have started it again 4 months ago. Now, they don't call it quantitative easing, and what does that really mean? It means the Fed's $3.9 trillion balance sheet is going to get a lot bigger. So that means the money is cheaper when we lend it out, whether it's through the Fed funds rate or whether it's through the mortgage interest rates. These are artificially held down numbers because the Fed is buying mortgage-backed securities, and I think it's $60 billion a month, and they're buying treasuries. They're buying both of them. And I can't remember right off the top of my head what the numbers are. It benefits you, yes. Does it benefit the country? I don't know. But it is keeping the economy humming. It is keeping you employed and getting paid more than you have been getting paid. And so it's just an interesting aspect to what is happening overall in the economy. It'll be a big part of the election, and we'll see what happens after that. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening this week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.